All right, good afternoon, everyone. Today is 10/10/2012. It's October 10th, 2012. It is Wednesday. Right now, you were looking at Dwayne's results from the live trading room this morning. You see he had 3 points, 3 points ES. That's 12 ticks ES, and he had 30 ticks on the soybeans. All right, I'm going to move the charts over to my computer right now, and I'll show you where the trades actually happened. Okay. There. Okay, you should be back at my computer right now. And the trades that Dwayne took right there, I'll go over the trades I took, but I want to show you the trades that he took first. All right, he had shorted over here on a stop. He was looking for the break down below this level right here, so he put a sell stop in down here. And when it dropped down through there, it entered him in the trade, and he took profit, 1431.25. So he took profit over here. Right in here. Right, is that right? 1434 to 1431. That's right. So we took profit right down in here. Actually, oh, sorry, that's the ES, 1427. What am I talking about? You took profit over here. I'm sorry. I mixed them up. But the 1434 I got right, didn't I? No, 1534. Sorry, I'm confusing it all. I got the numbers written down. One's at 1434 and one's at 1534.
I shorted 1434.25 on a stop.
On the ES. And on the soybeans, you shorted 1534.75. That's what got me all mixed up. All right, so on the soybeans, let's start it over. 1534.75 right here on the stop. And you covered it over here. Okay. And on the ES, you shorted 1434.25 on a stop. All right, 1434.25. Now, that over here was right in here, 1434.25, and you covered that down here at 1431.25, right in here. Okay.
It is correct.
All right, that was Dwayne's trade on the ES. Now, I didn't take any trades on the soybeans, but I did take a trade on the ES. For what it's worth, let me go through my results here. I was plus 17 ticks on crude, plus 5 ticks on gold, plus 6 ticks on the YM, plus 7 ticks on the NQ, and plus 8 ticks on the ES. The 17 ticks on crude came right after the end of the show. I'll show you where I did that in a minute here, right after the end of the morning session. But the ES trade that I took this morning was right here. We had a bearish cross, a pull back up, and tested the BBC with a down. Actually, I wasn't looking for the down close. I just sold the BBC, and I was looking for a close below this trend line I had drawn on there. Once we got that close, I took 2 points when we got down there. All right, I took 2 points profit on that trade. That was my ES trade of the morning. Okay, you can see the ES bounced around a lot in here. It gave another opportunity right here that went about a point. It closed the window of opportunity, but it was right on a news event, so I didn't take that. You can see it pulled up here to the YVR, and it bounced off of that, back down to the MA1, and it moved up. We had a blue buying area right here on the YVR. YVR is Yellow Brick Road, and it bounced up off of that nicely. Then it had a bearish cross, and right in here is where Dwayne shorted. All right, I didn't take this short over here, but Dwayne did. Let's see, did it have another opportunity? It didn't have an opportunity that I would have taken right in here. It did pull back up and bounce off the BBC, but I would not have taken that trade. Okay. On the ES on the 30-minute. Okay, let me just let me throw it on there for a minute. 30-minute. Here you go. This was the 30-minute chart this morning. It didn't do all that much this morning. It was kind of hard to do anything. It didn't pull back and test the YBR this morning, and it was all over the BBC this morning. All right, it dropped down, but there was nothing really there that you could trade. It's got some bullish divergence right now, though the cycle is headed down quite a bit. It suggests that it's probably going to keep going down, and the divergence is probably going to go away. Okay, let's look at this on a couple other time frames. 20,000 contract. Here was what we did this morning. Actually, you know what? It's 12:31, and I know Mike Reed is in the room today, so I don't want to spend too much time on any single market. I just want to show you guys what's going on. All right, this was a 10,000 contract. Okay, let's see. I'll show you the YM in a minute. I wanted to cover the 6E. All right, the 6E this morning. It's actually got a shorting opportunity right now, right here. But you know those markets closed about an hour ago. Let's scroll back here in the morning. All right, right around 2 o'clock. Market 3 o'clock, the market started to wake up. We had a bullish cross test of the BBC with bullish divergence. Now on the 4-tick range charts, it's the same thing for all the 4-tick range charts. All right, for everyone that's out here watching right now, I created this thing with the rules on it last night for the 4-tick range charts. I know there's a bunch of partners out here that are watching that might not have been in the live trading room this morning. If you're interested in this, or you want one, just send me an email. Okay, just send me an email. Say please send. Just in the title, just say, screenshot. That's all you have to say. But send it to, you can send it to support@cfrn.net if you want, and I'll send that off to you if you want. All right, it's just a quick view of the rules, and I actually have to change it around because the stuff down in the blue section on the bottom isn't. It's got one line in there that's not right. Anyway. 4-tick range. It's the same rules for all the 4-tick range charts. You look for a bullish cross, a test to the BBC with an up close when you have divergence down here. Okay? That's where you would enter on that one. Over here, opposite direction, you would short there. Over here, the up close was right here, but you could have bought right here at the Yellow Brick Road. You could have sold right here and bought right here. You could have actually bought right here, and it wouldn't have gone too far. It might have given you 6 or 8 ticks probably, which is the equivalent of 2 points, but it moved up pretty hard from there and pulled back down again over here. Now you see we're all over the weekly trading zone right here, so I wouldn't be trading in here, but there was opportunity, a couple of them anyway. I highlighted a couple. Here you had your bullish cross, test of the BBC with an up close, bullish divergence down there. Bearish cross, test of the BBC with a down close with some bearish divergence down here for the move down. Now right here, you could have bought it right here. You could have bought this blue line right here. Okay, right there. Bought that blue line for the move up. Okay, and right here, right now, you see you could have sold it right there. Actually sold it up here at 129.08. 129.08. And what you anticipate is a minimum of 1 bar's worth of profit. So in this case, it would be a minimum of 4 ticks profit off of this line. Once it's got 4 ticks profit, at that point, you can take your risk off the trade. You can take your profit. You can do a lot of things. I'm going to show you some more cases where this morning different things happened. Look at the ES is dropping right down here. I'm going to show you. I'm going to try to find my soybean chart. Nope, this is the ES 4-tick range. Again, on the ES 4-tick range, guys, we don't normally look at the ES 4-tick range, but it's all the same stuff. Okay, you're looking for your bearish cross. You tested the BBC and a down close with the bearish divergence right in there. Okay, same thing here, but we didn't have the bearish divergence. I don't know what I did with my soybean chart. Let me find that thing. All right, here it is. Okay, this was the trade that Dwayne took this morning. All right, that huge trade right there, but there were a bunch of other trades. When we had guys that were taking trades on this thing all morning. Here we go. Right over here. This was last night. The morning started right here. Did I point this out already on the soybeans? It looks familiar. It was a 6E that I pointed out. All right. But the soybeans started active about the same time. Trades are in pretty close to the same place. But right here you can see we had the bullish cross. It tested the BBC with an up close with bullish divergence. It moved up. We tested the YBR down here. It was blue. You could have bought it right there for a move up. That move, if you look at it, 15.45 1/4 up to 15.47.5. So that's 2 1/4 points equivalent on the ES. Now, when it did that, we actually had a bearish cross, so you could have faded it back to the BBC, sold the BBC for the move down because you had bearish divergence down here. All right, that's how you can trade that. When you when it gets like this, if you don't want to trade, that's fine. It makes sense. Meaning if it gets so that the BBC is setting up a short trade into the yellow line. If you don't want to trade at all, that makes sense. If you want to trade, you can trade the yellow line to the BBC and the BBC back to the yellow line. If you want to do it. All right, right over here, it went right up and tapped the selling area right here on the yellow line for a move down. Did it again over here. I know in the live trading room, it wasn't right there in the live trading room this morning. Right in here this morning. One of our guys, Eddie, took 17 ticks off of this morning. But you can see it's all the same thing. It's all the same exact stuff, guys. All the 4-tick range charts, they're different markets, but it's all the same setup. It's all the same indicators. You're looking for bearish cross, a test of the BBC, like right here, and bearish divergence down here. When I say bearish divergence, I mean the green line is moving away from the cycle. Okay, then you look for a down close for your entry. On these where it comes up and hits the yellow line, it's best if you have the color the right way there. Like in this case, it was red. Up there you could sell the yellow line. You could put an order on right there at the yellow line where it's red. Just have an order waiting there to sell it and take some profit. All right, that's as easy as it can get right there, guys. Right in here, there's an opportunity. Bullish divergence, bullish cross. Okay, you guys see that? That is all there is to it on that section right there. The NQ, I took some trades on the NQ this morning. Let me back this up a little bit. There were a bunch of opportunities. I think I only took one trade though. Right in here, I pulled up, hit the selling area on the yellow brick road, dropped off of that, did it again here and again there, and almost hit it there, but it didn't. I finally got into one of them right over here. I finally sold it over here, and that's where I took. It went 8 or 9 ticks, and I took 7 ticks profit on it. Then we had a bullish cross right in here, and we had price pull away from the BBC. We had some bullish divergence. I waited for the up close. I didn't wait for the up close. I didn't enter that, but that's what you would do. Wait for the up close and jump in on the up close right there. Okay. There was something else that I went over this morning that I would be remiss if I didn't point it out to you guys. In trading the breaks of the yellow brick road or the breaks of the elbow, when it breaks like this, the way that I was looking at it this morning, when it breaks, after it breaks like that, you have a bar that breaks it, like this one, closes down. Wait for the next close below that bar, okay, which would be right here, right there. That's what you would look for. Over here, it closed up right here. Wait for the next close above it, right there. Because there are going to be times where it breaks it and it doesn't really go anywhere. Let me just find one. I'm sure there's going to be a time like that. Okay, well, there are going to be times. Just take my word for it. There are going to be times where it breaks it and it doesn't really go anywhere. And even using that as a precaution, there's still going to be times where that doesn't work out. But you can see the same stuff over and over and over and over and over. You have a bullish cross, come back down, test the BBC. You have bullish divergence down here. Oops. So you would wait for your up close right here, and that would be where you would enter. Okay. Over here you have your bearish cross, tested the BBC. Bearish divergence, you'd wait for the down close right there. Over here you'd sell it right at the yellow line. Over here you would buy it right at the blue line if it pulled back far enough. But this was actually a bullish cross, a pullback, and tested the BBC with an up close because you couldn't buy it right there. It didn't hit it. Had the bullish divergence, you could have entered the trade anyway. Right here you could have bought it at the yellow line. Right here you sell it right there, and you sell it right there with the divergence down here on the bottom, you see? And that's pretty much it, guys. It's the same thing over and over and over again. I'll show it to you on another market. Crude oil this morning has been just crazy. It's been jumping all over the place. I took, what trades did I take on the crude? I took this one here after the end of the morning session, and that was one of the ones where when it broke the yellow line here, meaning it flipped it in the opposite direction. I waited for the down close, and I got in after the down close. All right, right there. Yep. That's it. Just jumping in. And I got 17 ticks profit on that one. And obviously, if I would have let it go, you can see right here, if I would have let it go, I think my entry was 93.12. And it dropped all the way down here to 92.37. That's significant. That's a lot of money. But if you just look at all these things here, I didn't do it over here, but you could have. I didn't do it over here. We waited for the pullback over here, the test of the BBC and the down close. I think I actually did take that over here, and I got just a couple of ticks on it. There was one that I took where I lost a couple of ticks in slippage. No, this one was the one. Sorry, it wasn't this one. I like my arrows to be truthful. We're transparent, if nothing else, guys. We are totally transparent. Pull back up, tested the BBC, and I took a little bit of profit on that one. Up here, again, the close above the one that broke it would be right here, so you would have just been able to ride it. The close below the one that broke it, you see I drew this black line in here because we never got the close below that level. That's the level I was looking for. But while I was waiting for that, it pulled back up, tested the BBC, and gave a down close. So you could have shorted it right there. If you had 8 ticks risk on, you would have stayed in this trade and made some nice profit. If you waited for the close below this area right here where the rectangle is where you would have entered. I think there was 24 or 25 ticks profit in this move if you would have shorted here, and there was about 11 or 12 if you would have done it here. Okay. I got long over here, apparently, at some point, and it moved up, and I took profit there. I know there was one that I lost a few ticks on. But anyway, right here you see the break of it. There was the one that broke it. There was a close below it. You could have taken that. Over here, that was the one that broke above. That's the one that closed above that for the move up. Over here, this was a little bit pre-market, but this was the one right there that broke above it. This was the one that closed above that. I mean, you can see this is crude oil, and there is just a ton of opportunity here. Okay. That's it. I'm going to shut down the crude. I didn't take any trades on the Russell this morning. I did take some gold trades, so I'll show gold quickly, and then I'm going to wrap it up. Okay. Here I took a short off the selling area on the YBR right there. Took some profit on that. Gold, the same stuff. When it breaks, you get the bar that closes above and the one that closes above that. Here it broke on the downside. The bar that closed down below that was right there. Okay. Here it broke on the upside. The bar that closed above that was right there. And you had a couple other opportunities here. Now, just selling it at the red right there, you would have lost. Okay, right at the open. Buying it over here at the blue would have done well. Selling it over here at the red, which I did do. What did that get me? I have 5 ticks profit. I think I had more than that at one point, but I ended up taking 5. Buying it over here at the blue, it gave the 1 bar's profit, which is what you anticipate. Selling it over here at the red, you can see that worked out. Over here at the red, again, it gave the 1 bar's profit. Again, over here, and here we are now. Crude oil just tanked again. And that's pretty much it on the day, guys. We had a pretty good morning. Dwayne had Dwayne had a pretty good morning too. And he had a great night with all the tweets. So I think, if you're not listening to the tweets, or you're not taking advantage of the opportunities that we have in here, you ought to. If you haven't taken a free trial with us, go to www.cfrn.net/apply. Take the free trial. If you have taken the free trial, and hey now, Mike, I see that. If you have taken the free trial, and you want to become a partner, and if the price was ever an issue, that should not be an issue anymore. We have lots of ways. We have new ways of making things happen. So, very inexpensive ways to get everybody that wants to be part of the family to be part of the family. All right. with that, I am going to wrap it up.